more capital will be allocated to climate themed investment propositions. That requires a mechanism for the market to price in a green premium or brown discount, if you will. And that's where the derivatives come in. We have built out a suite of climate action index derivatives together with MSCI, our partner there. Those are global indices. In Japan, we have a number of climate-focused indices, FTSE Blossom, the Nikkei climate change index derivatives. And even in the commodity space, we have a number of ESG-focused derivatives such as EV metals.
SGX's theme at BOCA has been Asia Simplified. How do you simplify a market comprising numerous countries, policies, and growth projections?
Frankly, that's what we've been doing for decades, providing access to markets that are not easily accessible for everybody in a simplified way, in a trusted way, in US dollars, very important, and in a way where people can come to one spot, Singapore, to access pretty much every single market on the equity side, but increasingly also on the commodity side, that are all the commodities that are relevant for Asia, and FX as well.
Where do you see opportunities for investors looking at Asia in the next year or so?
Because Asia is so diverse, it also offers great opportunities to look at different types of markets with very different dynamics. Today, maybe people are a bit more cautious around China, but at the same time, we've seen tremendous engagement around the themes of India, Japan, commodities in Asia. The most important thing here is to offer a diversified product suite. We have been building that out in the last couple of years. Originally, mostly known for our equity index solutions, but with iron ore and rubber and dairy, the commodities complex has grown tremendously, offering broader opportunities for people to invest in. FX with CNH, INR, and a number of other currencies really coming through now, very important as well. And if we look at the range of asset classes, the one asset class that has been missing for us has been in the rate space. And if we see what's happening in Japan now, that's looking like an interesting space again. So we're going to launch, and we've announced that a couple of days ago, we're going to launch short-term interest rates futures in Japan and in Singapore. And that's where we believe there's going to be opportunities with the rates environment that we're seeing today.
Can you explain how your recently announced short-term interest rate futures work?
These are the overnight rates that we're looking at. It's the TONA in Japan. It is SORA in Singapore, and we're jumping on the opportunity that's presented itself since people have moved on from Libor. We believe that the way these rates are currently set are in a more credible way, certainly something that has the backing of the institutional market, and building on that credibility further is extremely important, and we believe that we can play a role in that.
How important are U.S. investors to SGX?
Very important, and I think they are more important now for us than they've ever been. We see Asia mindshare amongst investors in the West, in the US, as well as in Europe, frankly, increasing. Our relevance to these investors has grown over the years. Number of reasons for that. Our business is broader. We're SGX Group now, not only SGX the exchange, and that comes with businesses in other areas, broader, and also for us presence. Second, within the derivative space, we've broadened the product suite. Again, I mentioned this earlier. We were known for our equity products, and with commodities and FX, we've expanded on that, and now the rates futures coming into play as well. And the broader the products we get, the more relevant we become for the macro funds, the hedge funds, the buy side, and a lot of that is of course here in the US.
Can you preview SGX's findings in your survey of US and European stakeholders on ESG?
Very encouraging to know that this is an important theme for investors. There's demand for these type of products. About 80% of the respondents have indicated that they believe there is alpha to be generated in derivatives for transition, and the far majority believe that these type of products will help towards the net zero journey, and so very important from that perspective. Asset managers are most likely to trade these products, as well as banks, and some of the prop firms have gotten into it as well. And the reason why they're trading it is they truly believe that there is indeed alpha to be generated. So there is a green premium, and we have the data for that as well. If we look at the indices that I just mentioned, early days, but we have the data to prove that there is outperformance there to be extracted. And the other reason why people are trading this is because there's real underlying client demand.